I've been hearing left and right, the stock market is better because you can create more capital, you have an easier entry point. But there at the same time, I also hear of other people saying, no, you're actually wrong. The stock market is not so good. Real estate, on the other hand, it's a lot better than that. And I keep hearing this back and forth, people standing strongly on one side of the equation versus the other people standing very strongly on the other side of the equation. But in the end, which one is it truly better? Is it such a thing as an investment that is a lot better than the other? Well, if you're curious, that's what we're about to find out today. Hello, everyone, and welcome back to another episode at Nova Rice Invest. For those who are tuning in for the first time, well, let me tell you, this is your channel for real estate education. So in today's episode, I decided to tackle some misconceptions or perhaps a myth that I've been hearing over and over from people who are standing strongly in certain beliefs, right? And by beliefs, I mean those who believe strongly in the stock market versus those who believe strongly in the real estate market. And in order to find out which one is better, let's go straight into my tablet. All right, so here we are. So we have the stock market. And let's do a comparison with real estate, right? So we have real estate right here. And funny enough, I'm not sure if it has to do with an age thing, but I've noticed that people who are 30 years or younger have a tendency to favor the stock market, and anyone who's above 30 has the tendency to favor more real estate. Now, if you happen to fall within that age bucket or that age category, please leave a comment below just to let me know. I'm trying to do a survey whether that's actually true, but at least the people that I've come across, that's the preference I tend to hear, right? And I think in a way it has to do with instant gratification. I want to be or feel satisfied right now. So with the younger generation, every time I ask them, why is it that you prefer the stock market? The first thing they tell me is, well, it's faster and it's more excited, more fun, right? So when I ask them, really, is it more excited and more fun than real estate? They say, yes. Why? Because with real estate, the process is longer. I don't have that kind of time. I want something happening today, right now. I don't have to wait years for that to happen. And if you put it into that perspective, then that is true, because real estate is more of a long-term strategy. You need to wait longer. So long-term, boring, according to the younger generation. But just like with everything, what goes up must come down. And if you make money extremely fast, then you're also prone to crashes that happen a lot faster. Meanwhile, with real estate, the process is a little bit slower, and it allows you to pick up on some cues for those who are very informed and staying on top of the market trends. So in a way, it allows you some time to sort of like adjust, plan your exit strategy, get out, and stuff like that. And speaking of exit strategies, that's another thing why I've heard people saying that they prefer the stock market because it ensures liquidity a lot faster, right? So exit strategy, liquidity. And what do I mean by that? So let's say, for example, you invested $1,000 in the stock market, and then within a few months, all of a sudden an emergency came and you need cash, you need liquidity right away. So what you do, you go into your application or the website or your broker and you instruct them to immediately sell $1,000 worth of stock. And in a matter of seconds, you will have the stock sold, and then probably within 24 to 48 hours, you'll have that money transfer into your bank account. So in terms of liquidity, I'll give them that. But a lot of people are saying that with real estate, you cannot have liquidity. And it just makes me wonder, that's exit strategy. I forgot to do that, exit strategy here. So in terms of liquidity, it depends on how you want to look at it, right? Because if we're talking about the sale of a property, then yes, I have to give you that, because it's not so fast to sell a property. Because yes, you cannot sell a property within a day. You have to prep it. You have to make sure it's looking nice and pretty. And if you are sitting in a great market, then on average, your property can get sold within 1 to 3 months. But if you're sitting in a market like today, right now in the middle of the pandemic, then it might take you a little longer to have your property sold. And we're talking about somewhere between 6 months or so. And it's not so much because there's no demand or people are not willing to buy the house. It's more of the lending process. Lenders are taking a long time because they are facing a backlog. They have a lot of demands for mortgages. So, that all of it adds up, right? So that it's only one portion of the liquidity factor, right? But I find real estate to be extremely liquid because every single month you get what it's called cash flow. So if you did your numbers right and if you did the calculations right and you bought based on the numbers and not your emotions, then you will have an investment property that every month is producing income for you. And to me, there's nothing more liquid than that. True, there's something very similar in the stock market, and you can get those through dividends. And those dividends can come to you depending on the stock that you're investing on a monthly basis, on a quarterly basis, or twice a year. It all depends, right? But if you come to think of it, there's not much of a distinction in terms of liquidity. Now, another reason why some people prefer the stock market over real estate is the entry point, right? In the stock market, you can invest in a stock with as little as $5. As opposed to real estate, you will typically need 5 to 20%, sometimes even 25% of the asking price. So if your property has an asking price of $100,000, well, let me tell you, that's quite a hefty investment to make, and not everybody has that kind of capital to come in. In that sense, yes, that is true. But with everything, you have to analyze the pros and cons. And what sometimes it's funny to me is I don't understand why people always have to sit on one extreme over the other. How about becoming more creative? How about leveraging everything that it's made to your disposal so that you can take advantage of every investment strategy that it's available in the market to help you get to that end goal that you would like to get? And if you want to know about how to do that, we're going to cover that right now. But before, if you're finding this episode interesting, do not forget to click the like button right here so you can help this episode rank and help other people like you who are looking for information of this kind. So let's say, for example, back to this tablet, right? Like I said, most people don't want to be neutral. It's like they find it boring to be on the middle ground. Like most people either are on one extreme or on the other extreme. But it doesn't have to be that way. In fact, I've actually created an episode a couple of months ago that I title How to Invest in Your 20s so you can become a millionaire in your 30s. And it is possible if you learn how to leverage all the investment tools available. So let's say, for example, you're relatively young, or maybe you started on the investment journey a little bit late, right? And you don't have that much capital to get started with. Well, one way to do that is by leveraging the stock market to create capital and help you get to real estate. So you can start out with $5, as I said before, and then eventually you buy more. Then we're talking about 10, then eventually you go up to 100, and then slowly you start building up your capital, right? You start building it up. You pick a nice combination of stocks for acquiring equity relatively faster, as long as you continue to monitor. Some of those are actually the tech stocks because thanks to the pandemic, the changes to the digital area have actually expedited. So we're seeing a tremendous growth in tech stocks. And at the same time, you can leverage a good combination of stocks that can offer you dividends. So you can take those dividends and reinvest them into your portfolio. And that way you create some sort of like a snowball effect, right? So you start out very slow. And then as you continue to propel yourself forward, then the snowball gets bigger, 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 and bigger. And then you will get as big to the point that you can manage to either 5 or 20% of the down payment that is needed. And voila, there you go. In a short period of time, as long as you're disciplined and you continue to monitor the market so you can get out or get into the market whenever it's convenient for you, then you will manage to amass enough money to invest in that first real estate property. So you're starting off with one. And then so what you're going to do, you're going to let the cash flow roll come your way, and you can use that cash flow and reinvest it into another property or make it grow faster by taking that same cash flow right here. And then you come back to point one, and then you start investing in the stock market. Then you do the same thing. You buy a nice combination stock that can grow and also create dividends for you at the same time. You continue to reinvest that money, and then you continue to propel yourself going forward and then forward. until that point where you hit that big snowball effect again, and you'll have enough to get another 20% down for another property, and now you have 2 properties. And then you repeat this process again, and then you'll get to the 3rd property, to the 4th property. And in less than 10 years, you would amass a good, nice, chunky portfolio in both assets, in the stock market and also in real estate. Remember, investing is not about just doing one strategy. Investing smartly, it's about moving your money around to where it's going to benefit you the most. So that way you can protect your investment against inflation, about the ups and downs in the market. That's what all investing is about. And it requires you to stay on top of the market trends. Investing is not something that you can just do once and then just completely forget about it. It's the same thing with your health. It's the same thing with your body. If you stop exercising, then your health is going to start decaying. And then if you start working out more, then you're going to feel stronger and healthier, right? So it's the same thing here with investments. So that's pretty much all I have. Hopefully you found this episode helpful. And while I still have you here, do not forget to check this episode right here. That's going to help you complement everything we just learned today. So I'll see you soon. And until then, take care. Bye-bye.